How's it going, guys? My name is Eish, and welcome back to the MoneyMetEish Midweek Morning Money Minute. In today's video, AMplats shares the love, DI, why even bother anymore, and Avengers Revenge? Aveng saw a massive 22% decline in the share price after investors were not feeling the love from the company's released trading update on Valentine's Day. The company then went to the press to try to rekindle the relationship by basically saying that retail investors had misunderstood the intricate accounting changes in the announcement with the issuing and consolidation of stock and the reclassification of how the company accounts for Trident Steel, which it doesn't want, but can't seem to find anyone who wants it either. The company told investors to wait for a more detailed release and, well, it's here. If we look at the normalized earnings, which doesn't consider the fair value adjustments and impairments, the group actually increased headline earnings by 57% from 109 million to 172 million rand. But normalized earnings per share decreased from 151 cents per share to 67 cents. The company's operating free cash flow also declined from 1.4 billion rand to 490 million rand, while the work in hand increased by 15% to 29.1 billion rand. The firm's free cash flow decline bothers me since the industries they operate in have notoriously thin margins and a high capital requirement. The pandemic saw a major boost in the DIY and hardware space as a lot of people took to household improvement projects while they were stuck at home. Maybe it was a case of boredom and not having anything better to do than fill the crack in the wall, and maybe hitting things with a hammer just felt really good. Either way, recent reports from Spar and Cashbuild show that the trend may well and truly be dead. Buildit saw an increase in trading up 27% from pre-pandemic levels, but only 1.8% of that growth came last year. That 1.8% growth was better than Cashbuild's recent reporting though, with Cashbuild releasing earnings for the 26 weeks ending the 26th of December 2021, and it shows that the trend is well and truly dead. Despite the fact that Cashbuild was rather hard hit by the riots and looting in July, with 36 stores destroyed, even with the financials adjusted for both the interim and comparative periods to exclude the effect of lootings, the group's normalized earnings per share saw a 10 to 15% decline, while the normalized headline earnings per share saw a decline between 5 and 10%. When the effects of the looting are considered, the decline in HEPS sits around 25 to 30%. The company will release its interim results for the period on or around the 2nd of March. Satrix has announced the conversion rate for its India ETF, which is listing tomorrow. The rate will see one letter of allocation equals 0.017 shares in the ETF, giving the ETF a share price of roughly 57.40 Rand. If you bought 1,000 letters of allocation, you will receive roughly 17.5 shares in the ETF. A reminder that if you have not filled out your tax-free savings account allowance for the year, you have until Monday to do so. Don't leave it until the last minute. Transpaco released interim results for the 6 months to the end of December, which saw revenue up 10%, with HEPS up 40%, and operating profits up 38%. The company did mention that although it was not directly affected by the looting, many of their customers were forced into closures of varying degrees. They also said that a large portion of the growth was due to their plastics division, and that the first half of their financial year is historically their better half. The company announced a gross dividend of 60 cents per share, meaning shareholders will receive 48 cents per share after tax. And finally, staying on the theme of dividends, if you are an AMplats shareholder, you are smiling all the way to the bank, with the PGM miner announcing that its final dividend of 49 Rand per share will be accompanied by a special dividend of a whopping 76 Rand per share to form a gross final dividend of 125 Rand and a total dividend for the year of 300 Rand. The final dividend is subject to dividend withholding tax of 20%, so of the 125 Rand, you will receive a net dividend payment of 100 Rand after taxes, but still, I mean, wow, 100 Rand dividend, that's a real Valentine's month gift right there. That's it for me for your midweek morning money minute. Thanks for watching, and I'll see you next week.